I've been saying this for quite some time, and we track this very closely, watching pretty much the southbound connectivity and obviously coming from the mainland into Hong Kong. And it's been very one-sided over the last month and a half. And again, I was just telling this to Sam, I don't want to be a conspiracy theorist, but you got to believe that SOEs and the National Party was buying this all the way to the bottom ahead of this announcement. Again, a lot of people were talking to me when I was in Hong Kong, China about the 50 basis points cut in the Fed. And I was telling them, I was like, listen, I don't want to be a conspiracy theorist, but could this be a function of, as we go into the elections, and there was a political reasoning behind this. But you cannot dismiss that anymore because every data that was coming out, I mean, when was the last time in the U.S. we had 7% deficit to GDP and we're cutting rates? I mean, we're cutting rates with a 7% deficit to GDP. You should be raising rates. So to me, there's an element of maybe there's a political reason. And again, coming back to Hong Kong, China, and what we're really seeing, this could be a function of the government buying these equities or the market as we're going to Golden Week, because they know everybody's underweight. It is incredible what we saw in Hong Kong, China, and it's incredible what we see in the U.S. of positioning into the Hong Kong, China names. Nobody is positioned correctly. The last data that I saw was that active mutual funds net holding into Hong Kong Chinese equities is less than 5% of their portfolio, which is a 20-year low. And then I saw that the PB data came out by Goldman and JP that we were at 1 percentile over the 5-year track, and on a 10-year track, even after what we saw with the volumes being so massive last week and people chasing, we're still near 8 percentile. We're nowhere positioned correctly in Hong Kong Chinese equities among the big mutual funds, the big hedge funds out of the States, out of United States. And more importantly, I think we are getting a little stretched technically. I don't think, when I last checked, the RSI and KWEB, which is the Chinese ADR ETF, at 83 is the highest that we've seen since 2017. I think we should see a little bit of an ease, but I'm telling you, all the Hong Kong-based China accounts that we did see, they're hoping for a pullback to get back in again. So I think there's an underlying bit to this market. Even if we ease short term, I think people will be buying this market as we go lower.
Yeah, and just broadening it out, of course, we're going to be getting more data today, which hopefully will help the Fed in its decision making, get the markets to wrap their heads around the pace and the size of the next cuts. We've had a winning September. Are we in for a sort of turbulent October?
I heard something really, really interesting. If you look at all the Goldman data coming out, I think this market is. I always come out here and have a view. Either the market's going to go higher or the market's going to go lower. This is the first time I really have no idea. We're in no man's land technically. Look at all the data that's coming out. It makes absolutely no sense. I mean, the curve is telling us that the Fed is pretty much done. Yeah. I mean, how it's steepening, that is they're done with cutting. Yeah. And then you look at the Fed Fund futures, they're saying 55% of a 50 basis points cut in November. So there's a lot of elements that they're not adding up. Somebody was telling me, what if this melt-up has already happened up until November, and after November, the market will do some correction going to the year end. So it could be the reverse.